Hi, and welcome to today's presentation in regards to economic wellbeing. Today we're going to have a chat with some experts in regards to different areas of financial literacy. We're going to talk to some accountants, a super expert, and we're also going to talk to Westpac Bank in regards to what it's like to enter a bank and what you can experience in that place. Economic wellbeing is actually where someone feels comfortable with their financial state. It's not about having excess money and massive amounts of money. It's actually about just feeling comfortable and secure in you being able to meet those financial needs and not having the pressure of outside finances put on yourself. So if you're able to get your groceries and pay your bills and you feel comfortable, that's what economic wellbeing is to you. The World Health Organization now recognises that economic wellbeing falls into the wellbeing of a whole person. So as long as our emotional, psychological, physical, social and environment are well, economic wellbeing will come into that as well. So it's about the whole approach to the person, and that's where it falls into. So economic abuse is where someone has power and control over another person's financial situation. This can occur in a variety of ways. It can be where all your money is given to that other person and they have complete control and you're just given a wage or something similar to survive on. Or it can be that you're denied the opportunity to work or to study. Research has shown that 99% of women who experience domestic violence also experience economic abuse. So types of economic abuse include total control of finances, restricting earnings, you could be forced to quit your job, gambling, concealing assets, forcing to give up wages and salaries, control over shopping, unable to buy things that you would like for yourself, forced to take out loans and credit cards on behalf of the partner. What we also know and what research has proven is that economic abuse doesn't discriminate. It can happen in all forms of relationships, whether that's of high or low socioeconomic groups. In 2014, the World Health Organization did research and they found that 40% of women stay in financially abusive relationships because they're concerned that the violence that they're experiencing physically and emotionally will increase should they try and leave. There is actually a difference between money issues and economic abuse, and I think it's really important that people understand that. Money issues is where we still have some financial difficulties going on, but it's in an equal partnership where those financial difficulties are discussed and explored together in a healthy way. So the relationship's healthy even though we're having some money difficulties. Economic abuse is where there's power and control, where someone takes the rights away of someone else to make those financial decisions or have input into those decisions. It's important to have an understanding of finances, to know where you're at so that you can make financially well-informed decisions that are right for you and your family. When we have economic wellbeing and we've got financial literacy and we understand the process of what's going on with our finances, decisions can be made a lot easier. So a budget is knowing what you're spending, and that's everything. So we're looking at tracking and finding out every little bit of money that we're spending. And that's looking at anything from like Netflix and insurances, petrol, food, and we're bringing that all together and we're trying to look at our income versus expenditure. When we're creating our budget, make sure that it's realistic and achievable. Don't overestimate or underestimate. Really do your research and find out where your finances are at. That way, we're setting ourselves up for a productive and proactive financial situation. A budget can also be developed for a week, a month, or a year. Do it to what works for you. Work it in your pay cycle and be really honest about what's happening in that space. So, with your budget, list your income and expenses. If you don't know what you're spending your money on and what your income is, it's really hard to make a plan. Write down everything you spend for a week or two or even more. This is called tracking. That way you'll know where your money goes. Be realistic and honest with what you spend. Set achievable financial goals. Stick to what you set. And remember, saving a little can go a long way. Setting financial goals is really important. It gives you something to aim towards. It also gives you a reward for your hard work and achieving something and saving something towards that. Now, financial goals don't have to be large. It doesn't have to be a new car or a house. It can be something as simple as, I'd like to save up to go to the movies or bowling or out for dinner. So set something that's realistic and achievable as your financial goal, and when you achieve it, reward yourself by doing that activity. The other really important thing to look at when we're looking at our financial literacy and we're looking at budgeting is spending leaks. So a spending leak is where money is going out that we didn't really think about or understand where it was going. So for example, buying a coffee every day. If you add that up over time, it actually costs a lot of money, and that can be classed as a spending leak. Buying takeaway, not taking your lunch, things like that, that's a spending leak. So when we identify them and we start looking at them, are we able to cut back and to save some of that money, but still give ourselves the treat? Financial tracking is where we track our finances for a set period of time. We write down everything that we spend in that time, and then we go back and add it all up and we can work out exactly where our money is going. Tracking allows us to be more realistic in setting our budget.
Economic wellbeing to me is where someone feels confident in their knowledge of where they are financially and able to make great decisions for the future for themselves and for their family. Number one, don't compare yourself and your family to other people's situations. A lot of things happen behind closed doors that you're not aware of, and their financial situation could be completely different from your own. They may also have loans up to the hilt too, so while they appear to be having all the lovely things, there might be a story behind that. Number two, budgeting. It's very important that you know where your money is going and how much money you're going to allow yourself to spend on certain items such as phone and electricity. Read. There's some great websites out there. There is the Money Smart website produced by the government. There's also a Women and Money website as well. Read to gain the skills. Don't just read for knowledge, understand it so that you can use the skills in any section of your life. Ask questions is a big one. Never be afraid to ask questions. You have trusted people around you. You can seek independent financial advice. And my last one is be very aware of credit cards and store credit because they can quickly get you undone. Understanding where you're at helps you to set goals, and when you achieve those goals, that sense of satisfaction is such a good feeling that you want to keep doing that and keep understanding and knowing more. Knowledge is power. If you know where your money is at, then you actually feel empowered to make very good, sound decisions, yes or no decisions. It's security for yourself and for your family, and more importantly, you can teach your children also what financial security looks like. So what I would advise if they were coming to see me to seek independent financial advice, all I'd require is really their tax file number. Sometimes in those situations it can be hard to get your hands on other documents. So once you came and saw me, then we could talk about different strategies that you could adopt to make the situation a little bit better. For example, don't sign anything you don't understand, open your own mail, keep logins and passwords secure, open a separate bank account that you can put small amounts of money into for yourself, and then I'd then refer you on to the many services that are available. A woman can start gaining her financial knowledge from simply looking at websites, which is nice and easy and secure on your phones. You could look at the Money Smart website, which is brought out by the government, which goes into a lot of things like budgeting and cash flow. And you can also look at a great website called Women and Money, which is also an Australian website, and it has great information there, especially around financial abuse. The beauty about being a rural woman is your sense of community. That's what we have as our power. So be in touch with your community. Knowledge is power again, so share that knowledge with each other as well. Use your talents. Especially through these times, we found a lot of women that are in rural communities have taken up a business at home where they've used their talents then to create themselves an income. Historically, the answer to that question is yes. There will be income inequalities later in life for women. But the fact is that later life security is a right for everybody, not just some of us. So due to circumstances such as having time off to have children, then coming back to the workforce part-time rather than full-time, the gender pay gap as well, all creates a scenario where women are not as financially independent later in life. This has flow-on effects, both socially, mentally, and with health as well. And that school of thought that women just need to try harder is not cool. So the only thing I can suggest is that you use your talents, do the budgeting, declutter, have garage sales, create yourself a nest egg. Study from home to improve your skills, and you can work from home as well. The ability to work from home is better now than it ever has been. So again, and I sound like I'm saying like this all the time, budgeting, that's a big one. Tracking your spending, negotiate. So ring your utilities companies, your phone companies, your bank with your mortgage, and negotiate rates and different plans to try and save yourself money there. You also have the ability with your utilities is to pay them fortnightly, so you don't get the big bill at the end. Create that separate savings account, have a garage sale, declutter. That's a good feeling in itself. And again, have a look within and have a look at your talents and see what you can give to your community that you may be able to make an income from. If a woman comes to see an accountant, she should feel very relaxed. This is not a stressful conversation to be having, and to make you feel more comfortable, you will find that there are a lot more women in the accounting industry these days. And all it will be is a matter of sitting down and having a conversation. You'll be surprised how much information we can find out about you just by having a simple conversation and helping you. People can come to accounting for a lot of things. People think it's just for an income tax return. And while that's the compliance side of what we do, we also offer budgeting, cash flow, assistance with loans. We can also get you in touch with solicitors, best solicitor to suit you, banks and the like. So we're kind of a hub, I guess, is what I'm wanting to do, where we can help you access other information. We can provide financial advice up until a certain point. Superannuation is a tricky one for accountants, but we can certainly bring people into your circle, and then along with us, we sort of create a team around you to help you feel supported and making the best decisions.
Economic wellbeing to me is around financial security, having the ability to afford the expenses, everyday expenses, your healthcare, your household expenses, your bills, clothing, childcare, those sort of things. It's also around having the comfort in being able to afford those expenses and having the choices to be able to spend as you want to spend that money. I guess it's easy for people to keep track of their income coming into their bank accounts. It's a lot harder to track those expenses as they're going out. So you really need to keep an idea of what's going out so you can make informed decisions about how you're going to spend your money, whether you're going to do that one-off purchase or whether you're going to actually concentrate on being more comfortable in your economic situation. Hopefully a friendly face, someone who's there to listen and an understanding ear. We always provide fresh coffee, which is a bonus. But hopefully someone who is willing to ask the questions to get a better understanding of that person and be able to help them in any way that they can. So normally when people think about their accountant, they think about coming in and getting their tax return done once a year, but we offer a lot more than just that. We can help with budgeting, setting up a personal financial plan, be that a savings plan or something along those lines. We can help you liaise with banks, government institutions, and we also normally have a very strong network which allows us to introduce you to other services outside of ours. So we offer a safe environment. We offer confidentiality, willingness to help. We can help you liaise with the government agencies. We can help you fill in those Centrelink forms. We can talk to the banks with you or on your behalf. We're happy to point you in the direction of other services if that's what you require. But more importantly, I guess we're here just to listen and help you in any way that we can. Budget, 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 I guess is the main thing. Set up a simple budget, listing out your income and expenses, but then also looking back at your expenses and comparing that to your budget to see where things are going and where that extra spending is happening. Talk to your accountant, discuss your financial situation, see if there's other things that you can do to help curb those expenses or make things a little bit easier. I guess another thing is always to review your monthly expenses, subscription services, your utilities, see if there's a better deal out there, but also talk to your banks as well and see if there's a way of minimising expenses, saving on costs, that sort of thing. First thing is setting up a separate bank account and just having a set amount go across every month, every week, fortnight, whichever way you want to do it, and just watch that money grow over time. Forget about it, leave it, set it. Another option is reviewing those household bills. See if there is a better electricity deal out there, gas, your internet, and definitely those subscription services, because if you've got a few of them going on, that obviously will lead into your income. You can also request that extra tax be taken out of your pay. So instead of you actually physically having to put that money aside, you can get your employer to put away a set amount each pay period. And if that's $10 a week, that's an extra $500 of tax time that you can get back as your refund. Another couple of things is pay off your high interest debt first. So be that your credit card or your personal loans, reduce those first before you look at paying off those home loans and smaller interest debts that you've got. And before making a big purchase, spend some time doing some research, then go back and think about it. Don't buy an impulse. There's normally a better deal out there.
Superannuation is very simply a tax-effective way of saving for retirement. In 1992, the government introduced superannuation guarantee as a way of boosting retirement savings. And that's because Australia has an ageing population and the government pretty much worked out that our economy isn't going to be able to support everybody who's going to be retired in the future. So because historically Australians haven't been too good at saving, the superannuation guarantee was introduced to boost that, and it was designed to be a universal system that everybody could access. One of the problems with the superannuation system is that it's designed for somebody who starts work at the beginning of their career, consistently works pretty much on a full-time basis, gradually earns more and more as they get older and then retires. That system is really designed for the average man, and it doesn't take into account that as women we have a very different career journey on average. So on average, 1 in 3 Australian women don't have any superannuation at all, and of those that do, when we retire we have about half the balances of men, and that's a combination of a number of factors. The fact that we tend to take more time out of the workplace because we care for others, whether that's children or other members of our family such as ageing parents. We also tend to work on average part-time and casually more than men. And so that means that our earnings are lower over time. Because with superannuation, the superannuation guarantee kicks in when someone earns a minimum of $450 a month. So if you're working part-time or casually, there's a chance that you might never actually have superannuation contributions being made, or they might be quite low. The other thing that as women, we tend to work in industries that have lower rates of pay. So if you think of things like childcare, education and nursing, for example, so when you put all of those factors together, that we take more breaks from the workforce, that we tend to work on a part-time or casual basis, and that we work in industries with lower rates of pay and experience the gender pay gap, it means that over our lifetime, women are less likely to achieve financial security than men. The idea with the superannuation system as it was built in 1992 was that everybody in the workforce would have a superannuation fund opened up on their behalf and their employer would contribute into it. So employers will make contributions on behalf at a rate at the moment of 9.5% of your ordinary times earnings. You can also add your own money. If you have a partner, they can make contributions on your behalf as well. And the idea is that all of that money goes into your superannuation account where it's invested, and you can actually choose how it's invested. So as well as superannuation offering investment options, there are a few other benefits that super provides as well. So for example, you can have insurance in your superannuation fund. So that's life insurance, it's what we call total and permanent disability insurance, which pays a lump sum if you suffer a total and permanent disability and can't return to work. And the other type of insurance is income protection, or it's sometimes called salary continuance, and it's basically a payment that will be made on a regular basis, usually monthly, if you're unable to work because you're ill or you're injured. So a lot of people think they have insurance in super, they might have life insurance. It's a really good idea to go and have a look and see what types of policies you have in your superannuation fund and also how much insurance that you have. One of the advantages of having insurance inside super is that it's coming out of your superannuation account, so you don't have to find the money to pay the premiums. Technically speaking, if you are working and you are earning at least $450 a month, there is probably a superannuation fund out there that your employer is paying into. Chances are you might have more than one fund. Very easy way to check if you've got more than one superannuation account. If you have a MyGov account and you've linked the ATO information to that, then you can go on to your account and you can actually see what superannuation funds that you have. So if you've got multiple funds, mind you, and you've given them your tax file number in the past, then they will all show up. The question of should you have one fund? What happens if you've got multiple funds? A lot of people will say that you should put them together, consolidate them. Consolidating your super fund can reduce your fees and charges, and that's good because it means you'll have more in retirement. But it's really important that if you've got more than one fund, you look at each of them and you look at things like how is it invested? Do I have insurance? And what are the fees and charges? Because that will help you decide what fund goes into which fund or which funds you should keep. And sometimes it might be appropriate to have more than one fund. You just need to be aware that you're paying multiple fees and that will affect your superannuation balance in the future. Well, 1 in 3 women don't have superannuation funds at all. And the other thing is if you're working part-time or casually and you're not hitting that $450 a month contribution amount, you may have a super fund, but there might not be contributions going in. The great advantage of having a super fund and maintaining it and taking control of it is knowing that in the future the savings are going to be there for you if you need it, or when you retire. It's particularly good for women because superannuation accounts have to be held in your own name. They can't be joint accounts. And given that 1 in 4 Australian women experience family and domestic violence, and one of the most common forms is economic abuse. Now, economic abuse is about more than somebody just managing the finances. It's a very intentional way of controlling money as a way of controlling people in a relationship. Because your superannuation account is in your own name, it means that you've got that little asset sitting away that you can be saving into that nobody else can legally touch. So it is a great way of keeping your own savings and in many ways saving for a rainy day. So it's really a way for women to protect themselves financially if an abusive relationship ends, there can be ways for women to access the money inside of superannuation. These are early conditions of release, and particularly under compassionate grounds. So there can be ways to apply to superannuation funds to get some of your superannuation account. Now, it's not ideal because you're touching your future savings, but it's such a good thing for women to be aware of, that money is sitting there as a backup plan, as a what if, just in case, and being able to access that money should the situation arise. There are a number of ways to get early access to superannuation. They're called early conditions of release, and your superannuation fund will be able to provide you with the details about what you need to do. So there are certain criteria that need to be met because, superannuation is designed for retirement. So ideally we don't touch it early, but if you need to and you meet those criteria, then you are able to do so. It is never too late to start growing your super, never too late to take control. The important thing is to find out as much as you can about it. The key things to look at, in how it's invested, what insurance you have, and who your nominated beneficiaries are. It does not matter whether you are starting your career or whether you're retiring in a couple of years. The sooner you take control of your superannuation, the more likely you are to be able to make the most of it. Because the idea is you want to have as much in there as you can when you retire so that it can provide you with an income, or you can take money out as a lump sum. So it's never too late. But the earlier you start, the longer time you have to take advantage of compounding interest, and that's where you're earning interest on interest. I think it's really interesting that we've gone from talking about financial literacy to financial capability, but looking at this concept of financial wellbeing and economic wellbeing, it's a much more holistic picture. Every single one of us has an emotional reaction to money. Every single one of us has things that we are really good at doing with money and things that we can improve on and learn. There is a very strong link between our economic wellbeing and our emotional and physical wellbeing as well. So economic wellbeing to me is really about part of that overall picture, about overall wellbeing. How do I feel about this? Do I feel in control? Do I feel like I can make informed decisions? It's not about the amount of money. And of course, there's a certain level of income that we need to be able to meet the everyday, ordinary essentials. But economic wellbeing isn't about having the most money. It's about that feeling of being in control. Money affects every single part of our life. So if we can take control of money, if we can feel in control of our finances, then there's a benefit to us in terms of the decisions that we're making. We can feel like we're making good, informed decisions, and we can feel more in control. That has a benefit for not just our economic wellbeing, but for our emotional wellbeing and our physical wellbeing as well. It can help take the stress out of life. It can help us feel like we are prepared for the what ifs. Economic wellbeing is that ability to meet our expenses now as well as in the future. So helping us to plan and to really feel like we are able to make those informed decisions and being in control has benefits for our everyday life. Number one, feel the fear and do it anyway. Superannuation is not as complex as we're often led to believe. And by making the decision to find out as much as you can, really helps confront that fear or that feeling of overwhelmed. So that would be my first one. Second one is understand where you're at now. So get your superannuation statement, have a look through it. Where is your money invested? What's your insurance? Who's your nominated beneficiary? So find out where you are now. Have a think about where you want to be in the future. Now, for some people, that might be working out where they're going to be in a year. It might be 5 years, it might be at retirement. But coming up with a plan. Make some money buddies. I think that's really important, to have conversations with people and to share that learning journey. There are going to be people in your life who know more, there are going to be people in your life who know less, but we can all learn from each other. And I think especially having the conversations with the young women in your life. So if you have daughters or sisters or nieces or cousins, talking to them about their money as well is really important. Also think about superannuation in the context of your entire financial position. So it's a piece in the puzzle. Taking control of your super can be a way of taking control of all the other aspects of your financial wellbeing as well. So look at the big picture too. Don't be afraid to actually think about all the other things that you might need to, not just superannuation, but look at your insurance, look at your budget, look at where your money's being saved, look at any debt that you might have. And if you need to get advice, whether that's from a free financial counsellor or going and seeing a financial advisor who specialises in superannuation and other financial products.
We believe the ability to make confident financial decisions is an essential step in an individual's financial wellbeing. We try and create a fairer and more inclusive community by helping people understand money, and we provide tools and advice to help people grow and track their wealth so that they can have a strong financial wellbeing. Some of the resources and services that help our customers budgeting and track their money, understand ways to get ahead, and make the most of product features to meet their needs. Being in control of your financial situation and aware of it is important from a financial wellbeing perspective. There are instances where people may not have control of their financial situation, i.e. they might have bank accounts that they don't have control of or loans in their name that they're unaware of and have their spending monitored. These are examples of financial abuse which occur in almost every domestic violence situation. Other examples of financial abuse might include taking complete control of the family's finances, being forbidden to work, taking your pay and preventing access to it, stealing your identity, money or property, using your credit card without your permission, or refusing to work or contribute to household expenses. It's not always easy to recognise when you're in a financially abusive relationship, and in some cases it could be a trusted friend or family member who points it out to you. Financial safety planning is important and information is power. It's common for an abusive partner to hide information from you regarding credit card balances, assets, money that you may or may not have. So wherever you can obtain information, it's important to make copies and keep those in a safe place. Other documents that should be stored in a safe place include copies of marriage and birth certificates and passports, copies of bank and credit card statements, copies of any benefits or insurance coverage. If there's property you own together with your partner, such as houses, cars, furniture, etc., it's important to take photos of all of those so that you can document they were part of your family home. Try and include pictures with your children or other family members in them so that you can prove they were part of the home. We understand that privacy and confidentiality are important to people in domestic and family violence situations, and at Westpac we take care to protect personal information. We can also assist with customers to change their details, such as your internet banking logins or where your mail is sent, for instance redirecting it to a trusted family member or PO box. So we understand that everybody's situation is different and we like to help customers through all stages of their life. So the advice we would give and conversation we have will depend on your individual circumstances. Westpac is one of the 4 major banks in Australia, and as such we can offer the full range of financial products. So that includes deposit accounts, card accounts, term deposits, investments, home lending, credit cards, insurance, basically anything that involves money or protecting your assets. So we understand that financial worry can be a barrier to people trying to leave a domestic violence situation, and Westpac will take care to keep your information private and confidential. Depending on your personal circumstances, Westpac can help you remove or change your online banking access. Note that this may or may not be appropriate in circumstances where it could be a risk to your personal safety. Cancel any additional credit cards. A primary credit card holder is liable for any of the outstanding balance. We can cancel any additional cards to avoid more debt being incurred, but when a change is made, we are required to notify the primary card holder. Understand your power of attorney arrangement if you have one. If you have revoked an existing power of attorney or appointed a new one, we will update our records. If customers have existing debt with Westpac and wish to discuss their financial situation, we can redirect them to Westpac Assist, who will consider their situation on a case-by-case basis and may be able to provide assistance such as a repayment holiday, extending the term of your loan to make smaller repayments, or perhaps separating your loan out to your own name if it was originally a joint loan. So we understand that financial self-sufficiency could be the difference between staying or leaving a violent situation, and in some cases we might recommend you see a free financial counsellor. Banks are here to work with you to help you achieve your financial goals. You're worthy of gaining financial independence, and arming yourself with information and education could be the financial foundation that helps you for the rest of your life. So some top tips to improve your financial health are: set goals, split into short, medium and long term, and create a budget. Track what you spend, reduce your debt, create a savings plan, and seek out ways to improve your financial literacy. At Westpac, we've been helping people for over 200 years, and we're here to help through all life's moments: joy, uncertainty, and change, such as buying a home, starting a family, or going through a tough time. We have financial resources and tools to help people get back on track after a financial crisis. Beyond banking, we're here to help in other ways, for example, through our Davidson Institute or the Ruby Connection. These are interactive platforms where like-minded women can come together to forge real connections and build financial confidence and empowerment. The Davidson Institute has a number of resources to help people improve their financial literacy. Specifically to help people affected by family and domestic violence, they've developed 3 guides related to being protected from financial abuse, regaining financial independence, rebuilding people's financial future. A credit rating is one indicator of your overall credit health. Credit providers will use this rating when assessing an application for finance and determining how much they can lend you. Your credit card and existing loans may only form part of your credit rating, but it's a good idea to understand how they can affect your score. Repayment behaviour, your ability to make repayments on time and consistently pay your debt down will be reflected in your credit score. You may like to set up an automatic repayment to take the hassle out of remembering to pay on time. Credit applications and accounts. The number of credit applications and the amount of credit and the number of credit products that you hold affect your credit score. Remember to apply for and open new credit cards only when needed. Other types of credit. As well as your credit card, your credit score is affected by any other loans you have, such as personal loans, car loans, and home loans. Being able to demonstrate that you manage your debts responsibly could help your credit rating. Your credit rating can change over time, so even if you've been less than diligent in the past, it's never too late to improve your score. You can request a copy of your credit report online through Equifax, and this will help you determine what banks are seeing when they're assessing your finance applications. Of course, if you're not used to managing money or you're in a chaotic situation, it's all about baby steps. Here are 5 habits that'll help you on your path to financial freedom. Create a buffer. Putting regular savings aside when you're able to can provide peace of mind for sudden expenses. Plug any money leaks, the little spending habits like takeaway meals that can add up. Ask yourself, do I need this or want this? Focus on the positives. Having a budget is an essential tool to help you achieve your financial goals.